Good afternoon, everyone. You're all very welcome to Thursday's US market open. Just to kind of follow on from yesterday's volatility, which we'll go through shortly. Obviously, markets proven to be quite tepid. We had that breakdown, we had that selling as volatility spiked again yesterday afternoon after our call. So those correctly predicted runoffs in the likes of the S&P and NAS very, very visible yesterday. However, as we look at calendar today, overall a quieter trading day today in terms of European, UK, and of course data prints out throughout the session tomorrow. Overall, we obviously have to be mindful of the fact that the government shut down, so it's unlikely that we're going to get anything out of the US. However, we are looking for developments in terms of the shutdown relative to what we've spoken over last week and, of course, through the week this week. In terms of overall sentiment, viability, dollar obviously getting that corrective move yesterday, moving back into that 99.1 off of that 98.0. We're literally tied around that that 99 handle today as we move into US Open. Naturally as well, the surprise for me was that VIX move. So yesterday we got that VIX move, we got that corrective move. We didn't quite get the gap fill on the downside, but at 3 o'clock yesterday we really started to see volatility ramp up, where we went from that 19 level through and obviously progressing higher into those 2021 barometer. So where does that leave price structure in terms of VIX? Well, it leaves us tentative at best. It also shows how volatile markets have been over the last 24-48 hours, 24-36 hours in fact, and of course that rise in the volatility curve yesterday, exactly what we'd expected, and of course getting that runoff. Now the runoff for me was actually a little deeper than what I expected. Yesterday we talked about these value areas here around 6690, 6700. Both of them sailed through, and we actually went as low as 6665 on CFDs, so about 6680, 6690 on futures. And then of course that really kind of embedded itself in a deeper runoff in the NASDAQ. That tech play got through underneath that 25050, 25080 on CFDs, only to just completely unwind a lot of the movement that we saw really on Monday to a second degree, but a lot of Friday's correctional price structure. And again, we mean revert. We actually went back into the kind of the 2-3 day average of where we traded at for most of last week. So last Monday, last Tuesday, last Wednesday, and last Thursday's value area around that 24,750, 24,800 was met very, very quickly. Now, again, yesterday I was a little bit more tentative. I wasn't quite sure if we would get to that level in terms of downside progression, but I had looked for revisions back into that 24,850 handle, which of course was easily met. So overall, markets has been quite tentative over the last 24 hours, as we've said. That volatility spike yesterday really spooked markets, and for me now it's really a case of evaluating sentiment as we move into US Open to see whether there's another spike in volatility index, or actually whether this is merely dead cat bounce recovery in terms of short-term vol end, creating a correction against that obviously bullish impulse from last week, only for markets to steady the ship and obviously try and push higher again. So for me, that's really kind of something that I'm looking at into 3 o'clock again today, really looking to see whether this is affirming short-term highs for VIX to run lower, which I'd actually like to see happen now, because of course dead cat bounce recovery, fill gap, and of course the likelihood of us going back underneath 18.5 would be quite visible to create that lower high scenario for that VIX to run off. And of course, if that does happen, you'd actually expect the S&Ps to hold these short-term bottoms, creating that V-shaped bottom yesterday, short-term lows today, and actually obviously looking to see and reaffirm that these levels actually hold up. So for me, that's what I'm looking at today, just removing and tailing back those arrows from yesterday, that sell-off yesterday, wanting to make sure these levels hold. For me, that 750, 800 handle has to hold today, and of course into today's open it has held on the NASDAQ, and of course around that 6690 has held in the S&Ps, where we're trading at around about 6700, 6710 today into the open. So overall, markets doing quite well. Again, we saw a very, very similar reaction today yesterday. Sharp sell-off, finding fair value around 46.5, which is again not really too surprising when of course the deep retrace that we saw in the S&P and the NASDAQ yesterday. In Europe as well, we got another rejection off of that 24,400 level, which we've talked about. We got back into those subsequent lows around that 24 handle, and we mentioned yesterday how that range was really between 24 and 24.4 with midpoint to 24.2, and of course yesterday we wicked down into 24, hold above it, pre-market trading today holding above it, and of course not without the spikes in the upside volatility this morning. Now of course when you look at price action this morning into 7 a.m, we actually saw DXY or the DAX in Germany spike, of course, run lower and is now trading back into this value area. So from my perspective today, it's all eyes on the VIX, it's all eyes on the DXY in both regards to seeing whether the VIX obviously does extremolate lower, try to fill that imbalance that we saw spike higher yesterday that wasn't fully mitigated and fully filled, and if so, can it create that secondary runoff? So basically, like what we've talked about, apexing down, dead cat bounce recovery into short-term volatility curve, creating that short-term lower high, and really looking to see whether this VIX index does move lower. And of course, if it does break through, I would actually be eyeing this range between 16 and 17 into tomorrow as a potential runoff zone should that VIX curve anchor to the downside. So for me today, it's all eyes on the VIX. If we start to anchor to the downside, it creates that renewed optimism for buying dips in the likes of the S&Ps, in the likes of the NAS, in the likes of the German DAX, and of course showing a little bit more of a risk on sentiment in these markets. Now, other markets, we've seen oil get back up into that 61 handle. So we got above 60 really pre-market this morning. We haven't really looked back since then, breaking above, and then of course continue to move higher back into that breakout zone. So we talked about it yesterday and more last week. Of course, that breakout zone from between 61 and 62, we faltered, we went down, we retested lows, and price action within a couple of trading days is back up testing that area. So for me, that's going to be critically important for the rest of the week. And of course, if we do get a break above 62, it's really a case of can market then segment back into this range that we've been trading at for the last probably 6 weeks or so, in around that 63, 64 and 65 handles. So worth keeping an eye on that one. Gold, as we said yesterday, it wasn't without its volatility. We were negative on Monday. Sorry, we're negative on Tuesday. We were negative again yesterday. We have created a short-term bottom. But again, it's going to be a case of, is this the dip rally? Is this the dip for the next wave higher? Very, very early days yet to see whether this is a lower high for an ultimate deeper retrace, or whether we get it back above that. For me, that 41.50 I think symbolizes 41, probably 75 as a closer anchor point. Anything above that probably sees price action become more elongated to the upside and becoming a correctional move against this deep runoff that we saw on Tuesday. But either way, gold incredibly volatile at the minute, and even on the 1 hour structural price, you've got this area of price consideration around here as well. So worth keeping a close eye on that as we move into obviously tomorrow. So gold is tentative to the upside, obviously in the green today. Dollar is trading back off of that 99.1 handle and structurally around that 99 print again. Very choppy back into last week's range. Euro dollar finding bottoms around 115.75, 115.80, as to cable around the 33s where price is trading at around 133.50 into the open. And then of course, as I said, back into risk denominated assets, S&Ps and NAS trying to find bottoms. But again, as I said, it's going to be contingent on how does that VIX curve develop through the course of the day. Now again, if you're to look at the higher time frame perspective on the VIX, moving up to the daily chart for a second, for me, as I said, that's going to be pivotal. We had that aggressive spike yesterday. At apex, it came back down. We are slightly in the green today in the VIX, or into today's open, but we want to see, does that materialize, does that sustain, or does markets ultimately unwind in itself? Now, in the future pricings, very quick look. Obviously, as we said, oil's proving to be higher. Gold also proving to be higher at around 2%. So a lot of those hard metals and soft commodities proving to be in the green today. VIX up slightly, as I said, into the open, but will it actually sustain? Will it actually materialize above 1% on the curve today, or will it actually start to deteriorate? And I said, if we start going flat on the VIX, that's probably the telltale sign that we see these equity markets continue to grind higher back into those ranges that we saw yesterday. So you're talking 67.50 in the S&Ps, NASDAQ up around that 150 to 200 mark, and of course the Dow incrementally getting back above 46.7 and really trying to push back into 47,000. So there's really your benchmark targets from me today, if it's a case that sentiment side of things actually continues to play out. DAX, as I said, finding bottoms for me above 24,200 sees buying coming back into those upper regions of the range. And of course in the FTSE, which has been largely immune to the selling that we've seen over the last few days, particularly of course after the UK prints yesterday, has continued to materialize to the upside progression. and into the US Open today, trading after London Open. FTSE 100 is trading at all-time highs again, so worth keeping a close eye on that, as I said, into 3 o'clock. A lot of the selling actually yesterday was really derived around 3 o'clock, so for me that is going to be worth paying close attention to, not just the first 2-3 minutes of the US Open, more broadly speaking. All right, so that's kind of where we're at today. Equity markets tentative, but obviously reliant on whether VIX volatility brings in more selling or more buying in the back end. Equity markets, as I said, tentative. Gold price obviously tentative, but moving into those short-term highs underneath 41.75 at around 41.50. And of course, as I said, in the crypto space, again, Bitcoin getting short-term bump and run today. Like with a lot of the risk assets, kind of finding short-term bottoms. 107.50 is the anchored low in BTC. Ethereum anchored lows is around that 3,800 down as far as 3,700 on Wix. So of course today again, another wick last night. Price action since then materially holding up against that V-shaped bottom that we saw last night. So you're kind of seeing that across the board. V-shaped bottom holding up, V-shaped bottom holding up. So that has been the centralized theme. So, and then of course when you look at the total market cap in the crypto space as well, starting to see bottoms come in here around that 3.5 3.6 trillion. So that of course is going to be the anchored low point into Sunday's weekly close in the crypto markets as well. All right, so guys, that's really where we're at the minute. 2-3 minutes into the open now. DXY still range bound around 19s. VIX curve for me, really just looking to see whether we segment more. You can even see on the open today as well, the cash open exclusively in the markets at 230. As I said, equity markets, the VIX curve is gapping down slightly. So again, interesting to see whether that comes through. If that continues to remain downside, you've got this unfulfilled area yesterday. And of course, if we start to see that price action slip and slide on the VIX curve, it allows for those S&Ps, NAS really to move back into really where we were trading at yesterday. And of course, we've got that 3-day range from Monday, Tuesday and Wednesday in play. So ultimately, above 25,000 sees NASDAQ push through. Above 6720 sees S&Ps kick on, and as I said, above 46,700 sees the Dow correct against those sell-offs yesterday. But of course, looking to see whether that becomes sustained. If the VIX pivots and takes out the short-term highs above 19.4, well then you're actually expecting the opposite. You're expecting the S&Ps to sell off value area, ultimately make another move lower. NASDAQ sell off value area, revisit yesterday's lows, and subsequently the same formation, reject around that 46.7 on Dow, and incrementally look to try and take out those 46.50 lows and segment lower. And you've got Friday's value area around 46.1, 46.2 as a pivotal area for downside progression if, of course, that VIX does move higher. So either way, whether it's higher or lower, we've got directional bias, we've got price points, we've got a narrative in place to be able to support the VIX curve in its movements as well. All right, so guys, that's where we're at today. Other than that, not really too much else to report. As I said, tomorrow is the busy day in the calendar. We've got UK retail sales at 7 o'clock leading the way. We then obviously have French and German data after the European Open between 8 and 8:30. We've got the European data prints at 9, followed by more UK data at 9:30. And then, of course, traditionally we would have had the US data prints, but of course with the shutdown, likelihood is in the next 24 hours we don't get a reopening and this data doesn't report, which means obviously we're sitting on the fence again. So, of course, keep an eye on that. Looking at confirmation markets has been very choppy. When you look at the October price movements overall, very, very up and down. We've had a shutdown, we've had no data prints, a lot of kind of fiscal sectoral unknowns. And of course, we're yet to really start to get the rest of those earnings reports, which we'll get over the next kind of 2 to 3 weeks. So I expect November to be less choppy back and forth and more distinct in terms of directional bias, because as I said, a lot of the movements in October has been driven around about Trump, political comments. We saw it on the 10th, we saw it on the 14th, that corrective move, and of course we saw it on Friday as well, that V-shaped bottom and corrective move as well. So just October with no economic data, it's very, very fragile against, as I said, anything politically orientated tweets, tensions, escalations or de-escalations in the back end. So naturally, if you're trading any of the risk denominated assets, you do have to factor that into close consideration. All right, guys, we're going to leave that there for today. As I said, worth keeping an eye on those value areas, worth keeping an eye on the VIX. VIX is moving lower. initially on the open, but again into 3 o'clock. Does that sustain? 6 minutes into the open, we're back under 19 again on the VIX, moving at 18.75. And as I said, if we break through 18.5 and segment this breakdown here, the likelihood is S&P's tries to break through, as I said, to the upside. NASDAQ tries to break above value area, and incrementally, as I said, on the Dow, we see price action try to break above 46,700 on CFD pricing instruments. All right, guys, leave it there. Have a great day. Trade safe as always. Any questions, feel free to let us know, obviously, in our community. And of course, we'll see you all next week for more economic and market run-throughs. All right, thanks, everyone. Have a great day. Thank you very much.